Good morning. Freaky Friday? Maybe. I think I don't want to start thinking too far ahead of anything. But I suspect it's going to be more like boring, grindy, choppy Friday. But we'll see how it plays out here. In the NASDAQ yesterday, it didn't look too bad looking at the cues. However, there was some pretty nasty drops in some stocks, which was rather surprising. This was one of them. It's like all of a sudden, it's a rather volatile stock, and you can see some big red bars along the way there. But, something going up like this in a tight arrangement of candles making higher high, higher low bars, it stalls and nasty drop like that. It's like all the buyers all of a sudden just running. Well, like I say, it is what it is. It's kind of, I'm looking at this and thinking to myself, the candlestick gurus with all the names are just going to love this one to point out the doji bar that created this pullback. In reality, it didn't create the pullback. It just stalled. And, what happened between buyers and sellers, buyers went away, sellers took over, but it's not about that candle, because we can find candles like this, probably hundreds of them, that produced absolutely nothing. You just look at it as momentum stalled, and then it's likely to pull back. It does not suggest at all the depth of any type of a pullback. The interpretation is it just stalled in momentum. So where the markets are at here, they're obviously down. Looking at the futures here, the S&P's pulled back to support, and now they bounced up. And the question is, do they make a lower high at this point and then move further, down to here, or does it make a double bottom as it retests here? So my expectation would be that it does come down and retest this, possibly come down here, and we'll see the extent of whatever correction is going to happen. Now, we put it in the context of this was a strong move, and we'll look at the NASDAQ, but that got up toward the prior high and overcame it. So an obvious place that it was going to pull back. And as I mentioned yesterday, that the odds were that their momentum was going to stall because of the wide range bar. And then it did. And so now we'll see. Does this chop sideways? Does it pull back? In reality, as I'm looking at this, I'd actually rather it start to pull back from here and form a buy setup at some level in here, but we'll see. NASDAQ pushed up greater than 100% retracement, pushed up above the high, just a likely place for it to start to pull back, and that's what's happening. NASDAQ showing relative weakness to the S&Ps, and this is common, meaning what showed strength on the way up often shows weakness when the correction starts, and the weaker one shows relative strength. So we saw that, would catch up in the S&Ps, to a lesser degree in the Dow. It's just a common thing that happens as to what was weak tends to play catch up. Whether it catches up completely is the big question, meaning can the S&Ps, after some corrective action, push up and eventually make it to new highs? And so the NASDAQ made it to new highs. The S&P is just working on this high over here, and the new highs are even further up above. We'll see. The Dow, which was weaker, and it's attacking this high. It's stalled there. Not such a big deal, and it's showing some relative strength compared to the others at this point. It did yesterday, but it has violated its uptrend on the hourly time frame, right? It was making higher highs and higher lows, and now it's broken through major support, and we'll see if it makes a lower high and then pushes to the downside. Now we've got resistance on our intraday time frames. And this is I guess, a larger area, more significant support, of course. And so there's our other area right there. And in between here, we have a void. And if this does start to head lower, it would be very surprising if that little area there was to hold. It is in alignment with a big whole number, 25,000 or thereabouts. So it's something that we're going to want to keep an eye on. I'm just going to go back to these S&Ps for a minute. Okay. We don't really have any significant support here in the Qs. And that little shelf there, which it's bounced off of. So we'll have to see. This is trending down. So, we've got a short-term bearish bias, more so in the NASDAQ than the other two. Bonds stabilizing there, 20 MA chopping around. Really, we don't trade the bond futures, but this would be something that I would stay away from. I'm not certain, of course, whether this is going to hold here, try and move up, but we'd go to the higher time frame and look at the weeklies, which right now these don't look like giving us much of a clue as to their direction, short term. And similar with oil, it found some buyers here, but it's pretty weak so far as any kind of a bounce after two bottoming tail bars. Yesterday had a decent day, and the energy sector was the leading sector yesterday with those ETFs showing strength. You can see the XLE here actually took out this high, and we looked at a few stocks yesterday within that sector that they still similar to this, whereas they're chopping around. Some are retests, and this sector may reestablish itself in moving up. We'll have to see if oil actually stabilizes or starts to break down. And I don't have it in the list. XPO. OP actually looks a bit different, so there's various sectors, energy ETF sectors, so overall this looks pretty good. And XES, and they bounced up, but they're not in solid uptrends anymore. So they've got work to do. You can see the 60-minute is just flattened out here, going sideways. So no trend typically makes it more difficult for trading. And the Russell, some weakness yesterday, but overall strong uptrend. One down day doesn't mean a whole heck of a lot. And so far, they're actually, I think, I saw it in here. They were actually up a little bit or bouncing back and forth between up and down a little bit. So neutral there. Transport's just a giant mess, but overall, it's holding some support, and it's got resistance up there. So just to wait and see to see which way that's going. So as we see this market beginning to correct here, the takeaway is that it's really not a big deal based on the prior strength. No real damage or excessive damage has been done, but some stocks took some pretty good whacks yesterday in the NASDAQ. So we'll see if there's any follow through to that. I'm going to see what this does next week. I'm going to leave it alone for today, but I like how this is shaping up for an intermediate term trade, as this has been stabilizing. And this biotech, oh, wow, that came back. That doesn't look right. That was under yesterday's low yesterday. This, oh, that's a weekly time frame. That's why it doesn't look right. All right, this went down there yesterday, but this is maybe just overall just chopping around prior to a move up. So I'll continue to watch this, see what it does here today. And you know, this gave me a little slap 2 times in a row now, and recovered. So I still like it. It's just overall whippy, and I wasn't going to give it much more of a chance. I gave it decent room, and it traded all the way back down there, so I cut it loose. And as far as what's moving in here, surprisingly, Apple is weak. I know there was some news on it, but I mean, these kind of trends, which are, this led the way up, and then bullish consolidation, and now it's kind of whippy, but we'll just keep an eye on it. And it comes back, and we'll see what that does. And well, Tesla coming back from the cliff here in a big way, but getting pretty erratic. So we want to see if that'll actually tighten up. It'll take a while. MU, which has done really nicely and also led the way up, sloppy here, and we'll see if this starts to break lower here, or which way it's going to go, and then give us an insight as to maybe the overall market as well, which of course we'll be keeping an eye on. And Facebook, that pulled back quite a bit. The shack we got out of perfectly as an intraday out from where we got in was a really nice gain. And it doesn't look all that bad, and it's certainly still in an uptrend. So we'll continue to keep an eye on this to see how this corrects as things move ahead. We come back to the winners like this because they typically continue to win. This is pulled back a little bit. I know Dan was looking at this yesterday. I don't think anything was established in it, but he'll review that. What else here? Looking at some leaders, Microsoft. You see, most of the damage was done in the NASDAQ yesterday. And I think that's it, Dan. Well, this one reported earnings down here up near the prior high, so maybe that'll correct some more. That's it. Go ahead, Dan. I hear Dan's mic is on.
Yeah, sorry. Good morning, sound check, everyone. How's everyone doing? All right. You all know the drill. Let's look at open trades first. I don't have as many gappers today, which is good. And, with the gap down in the market, let's see what's going on in our positions. Spider, we have a out of the money put spread, but way the heck down here, the 270, I think. So that's totally fine. IWM, we have a covered call with the new stop yesterday's low. That's fine. The covered call is helping us out. QQQs, we took profits yesterday at like 2 cents, or maybe the day before. It doesn't matter. Or what? It doesn't matter, yesterday or even Wednesday. I don't know. I'm still holding some because they're way far out of the money. I'm short the 169s. ITB we put on yesterday, put spread, that's fine. RCL, a bear call spread, far away. This FIVE we're stalking today. Now that it has more football players up here, then this looks like a great 30-minute low trade. And what we'd be doing is shorting a weekly out of the money call spread. Costco down 97 cents, but in the overall picture, nothing wrong with that. Zulu Sierra. That's not it. My minder says it's gapping down 39 cents. That's fine. We sold a way out of the money $30 put down here. Here, beautiful setup there that came courtesy of Sanjay. We have another put spread there. And this might turn into a directional. You know, if we had like a 1, 2, 3 today, which means what? An inside bar, relatively equal highs, the upper 2/3 of this, well, really upper, I like upper 80s, but you know, upper 2/3 of this range, then you buy over the high on Monday. So that looks great. CSX, I noticed a small gap up today. We have a covered call on the 66s that expired today. So that was just a picture perfect, another covered call where we got paid additional premium while the stock or marathon runner is resting. We're getting paid for it. And so I sent out an alert saying over the 30-minute high to roll them to the 67s for next week. RTN, I sent out a brief little recording yesterday after the market, how we did the setup, which was started with a bear call credit spread. Then we legged into an iron condor, and we've done nothing since for 2 weeks. And it's been in a sideways coma, which we want in a condor. And we're very profitable in it now. So I just sent that out as a lesson for our entry and management. Grub, we have a covered call. It went against us, but we're still in it. It didn't hit the stop. Zen, same with that. Didn't hit the stop, but went against us. LOGM, we have a covered put. So that's the opposite of a covered call. We shorted the stock and shorted a put. CHRW has not triggered. I know I'll probably just cancel it, but I don't know, should I? Look, you have 1, 2, 3, 5 inside bars of this ugly red bar. Was a sell setup and topping tail on the weekly. I'll leave it there, why not? On Monday or today or whatever, Tuesday, if it trades under here. Right, correct, I think it'll look better. See that? I just wanted, you know, their input too, Greg, because, you know, we're constantly teaching. Here's another one that we have a covered call that you know, our cost basis is well, the stock, we did 2 lots like 84 or 40, but by selling the call, it's making that profitable again. Now that's a 1, 2, 3 on the weekly. Look at that, is beautiful. That's a textbook 1, 2, 3. Wide range bar from consolidation that where the real body closes to new highs. Wow, this is a great multiple time frame chart. Both on the, look, here was a 1, 2, 3 here. All right, Greg, there you have it. I'm going to do a little video on that. H. Wow, that's a beautiful. Let me shut this down. Yeah, the short videos, absolutely. All right, continuing. We are not in UTX, but I just have it in this window that I'm watching. We're in Roku, a put spread. That's fine. Zebra, we still have a half lot, and then we're trailing under a prior day's low. Intel, we have a covered call. And so yesterday I legged into our covered call, and our stop is under this small pivot right here, 5506. So we're still doing fine. Even if stopped out, we're very profitable. And that's it. Oh, well, our Google, of course. Oh, so Greg, I did put this on into the close. I just did a small lot, and the setup was 3-bar pullback and a strong busting a move. And it was right here. It was you know, going to be a reverse head and shoulders on the 15-minute. No, I didn't cover Boeing. I don't know why, but yeah, I'm in that too. All right, yeah, I just skipped over it for some reason. So yeah, we have a gap down here, but we sold the 1120s. So today's going to be an example of that melting ice cube. Now, secondly, even though it's down $6, it's going to be spready at the open. They always are, but I'm going to be very curious after 5 minutes when the spreads tighten a little bit, what the spread is, because I sold it at 58 cents a share. And because of time decay, and we get paid for the overnight risk. So it's at 11.28, so it's still $8 out of the money. So I'm thinking, just my guesstimate, is that we're still going to be break even with this $7 gap against us, because it expires today, and you know, we got paid for that overnight risk. So I'll come back to that. Actually, let me just load it up here, so then all I have to do is look at it. So it closed at 60 cents. Okay, so that was only 2 cents against us into the close. All right, Boeing. No, I didn't yet cover it, but we have a out of the money, 357.5 way down here. Yesterday, you know, it was a red day. 50% retracement, you know, got caught up in the market weakness. It's expires next Friday. So look at pre-market action here. Gap down, bottoming tail, range expansion into resistance, and now it's going sideways at resistance. So it's fine, totally nothing to do. Let's look at some of these gappers now. There's a couple earnings. Abgo, which is Broadcom now. I don't know why they changed their symbol. BRCM was the old one. All right, so 258.75. It's extended. I mean, this 250, and that's a bearish kind of gap. That could be a call spread candidate, but only short term, because it's still bullish weekly and monthly. Zoom Z, when I saw this last night, I immediately just took a picture of this beautifulness. Here's another 1, 2, 3, just like our Hyatt Hotel. Wide range bar from consolidation, 1, 2, 3. And this is actually what we call a 1, 2, 3, 4. We have a breakout on the weekly and the monthly with a price void. Here, I'm going to write this symbol down too for my 1, 2, 3. So I got Hyatt and Zoom Z. Those are beautiful 1, 2, 3s. Gapping up here to 3180, which is too big for me. But look, 3180 is way the heck up here. That's like, when I look on my price void, that's like half to 2/3 of my piggish target. So it's not a tier 1 at the open, unfortunately. If it were just opening up like 2750, even 28, then it would be a tier 1. But, you know, you all know the drill, that many times I say it's too big, and it gets bigger, like this. Remember Lulu kind of gapped up over 10 points, which was 10%, and it was a gap and go. But Zoom Z, what percent is that? It's gapping up $4.80. That's like 15%. So that's a big old gap. Docu, it's extended. I put this one in my dance list recently, new IPO. Was gapping up to new highs and is coming in. That's a bear call credit spread candidate. I'm going to keep an eye on that. I'm going to put him in a window. SFIX, never heard of this one, but look, another recent IPO. How are we missing these IPOs? But I don't know, I don't like the way this trades, so I'm not going to put it in my dance list now. But 2080, it's gapping over this bar. Well, it's gapping right to it right now. It did gap over it to 2150. But that's still a put spread candidate. I'll watch it. Because remember, on earnings, we have high volatility. Here's, what the heck is a C block? But look, this one's going in my dance card. Look at this. This is new. Greg, do you know what they do? I could go to Yahoo, but look at this beautiful bar. Now in golfing, it's sloppy, I get it, but it's opening flat. You know, maybe it sets up 30-minute high, maybe it sets up in 3 or 4 or 5 days. But I'm gonna watch, and I'm putting C block in my dance card. All right, Google covered. Google, Facebook was down a lot more earlier. Look at that, it was 186. And, you know, there's more news there. And Carbon software. All right, I don't know what carbon tech means, but yeah, software's good. Facebook, you know, I saw the news. They released someone's data about 14 million customers, you know. But that's a bearish inside bar on the weekly chart with a topping tail. So maybe, you know, this could be a call spread for next Friday. Finco, never heard of this guy. New IPO to new highs, 1190. Possibly a short-term gap and crap. I don't even know if it has options. Let's see. Finco, too spready though. And it says Class A. SFIX, let's see. Yeah, they're kind of spready too, but at least it's tradable. We'll keep an eye on it. CBLK has no options. SFIX. All right. Now I just decided to look at a couple of these steel stocks just because of the tariff nonsense discussions again, which is, you know, part of the reason, or who knows why the market's down today. That's, you know, that's whatever the news blasts on the TV to make us think. And then everyone's, oh, the market's down on tariff because that's what the news is talking about. You know, what if they said because of, look at all these homeless people, you know, migrating into California, the market's down. Oh, okay, so that's the reason today when you're talking to your buddies at happy hour. Ooh, Zoom Z getting slammed at the open. All right, so X, there's absolutely nothing in it there unless it breaks out. Alcoa, that newsletter guy, I tell you about his, you know, claims all the time. Today's email he sent out saying this Alcoa, that he says his people told him that get ready for a 25% return. I don't know. I just hate preposterous statements that are unsubstantiated. I mean, I wouldn't buy this. I wouldn't even do a put spread on it yet. Here's some other ones. Stoll is holding better, but nothing new is holding the best in terms of put spread. And I remember mentioning this on this day right here as a put spread, but no, nothing there. I just saw this one coming by the ticker and I looked at it, like for our gold as a gold stock. And I'm like, wow, this is outperforming. And I wanted to look at this for put spread. Azul, I see semis here are weak. I'm just taking a glance. FANG stocks. The market gap down. IWM holding the best. All right, Azul extended downtrend all time frames, but look at that volume and a gap up here. You know, we'll take a look at it later. All right, Qs. All right, it's holding the pre-market support there at least, but not with a lot of oomph. Spiders have a tad bit more oomph. IWM, the relative strength so far, and diamonds the best. So that's the order of relative strength. Diamonds, IWM, spiders, and Qs. Look at this. Daku had a nice 15-minute chart, pull back, engulfing bar, but I'm not doing anything with that. It's too extended. Wow, look at this Zoom Z failure. Wow. That is not normal to have a big bullish gap like that. That's a bullish gap that buries, actually. I mean, I wouldn't do anything because of all the support underneath, but I have no interest in it now. C block still coming in. All right, let me look at my open positions here. Do we have any other problem children on our hands that we didn't talk about already? And the answer is no. All right, Google, let's see. Right now, midpoint, 75 cents. So I'm down 17 cents a share. So the question now is, well, we're talking management. I ask you all the question. Originally, we said we're going to have no stop and we'll roll it. But if the market goes lower, do you want to cover half now at a small loss? Do you want to move the stop the day's low? Do you want to roll it? Do you want to do nothing? Say we're in management mode right now. What do you all recommend on Google here?
As I've got SWKS watching for a short under today's low. And we spoke about it yesterday. At the end of the day, I said, if this thing was to gap down under the low, it's going to be a short candidate to go lower, and it may even be a swing.
Oh, I forgot. We also have an IBB put spread. I know Greg stopped out of his equity, but our stop, because we shorted the 108.50s. So our stop is right here, 108.47. It wasn't in my minder for some reason. That's why I missed that one. All right, Q's still the weakest, you know, courtesy of the fangs. Tesla is still holding strong.
Got a topping tail on those Qs, and of course the futures and the S&Ps, which says they're going down.
I know. And there's room to go down. So that's my concern here with this Google also. Do you want to get into the rolling game or just take a small loss and you know, regroup?
Decide.
I think I'm going to kill it under that pre-market support base. Yeah, John, that's exactly what we would, that's one option, and that's what we're discussing right now. But we would roll it to next week, John, and further out of the money strikes, So we would still take a credit. So the loss wouldn't, you know, actually be there per se, because we're taking in a bigger credit. But if Google continues to drop, then we're just increasing our loss. Do you follow? So it's not, you know, and that's why we only roll when the pattern says it's okay to. We don't roll in hope mode like some services do. Some services say never take a stop. They say people who take stops on short options are crazy. Just keep rolling in perpetuity. Well, some of those people have been rolling Boeing call spreads since 160. Down here, see 150 on this monthly breakout? So yes, we intelligently roll. But Tesla, I was telling you yesterday that I did a put spread this day and I got filled 50% of max gain. But the only reason I'm bringing it up again is because if the markets decide to hold, this is a candidate for us to sell a bull put credit spread for next week. Far out of the money, you know, under the low of this bar. So I don't know what we'd get paid. It's not bad. It's just in the market environment, and that gap's kind of too big at a prior high for me, Sanjay. I would want it to just set up more. But I like the weekly for a put spread too.
Guys, let's short the Qs here. I'd give it, you're going to have to, I'm concerned with the gap fill, so we need it. I'd give it $1 stop up above 174.50. Short it under the low. Under the low of the day. Spiders probably could do the same, but Qs have been weaker, so I picked those. But if one goes, the other probably goes.
Look at this, another fat finger. I have no idea what I just did. Jesus.
I don't think so. Something's up. I typed it in there. I got Qs, but I don't know.
So I'm going to exit this without saving it. All right, I'm just reloading my chart here because you saw what I did to it. All right, let's try this again. Wow, a lot of my bullish gappers that I was looking at are tanking, but that's fine. They don't set up the way we want. We move on. All right, got my candlesticks back. All right, see, Boeing got a nice little pop there. Yeah, I'm watching 5. Yeah, I'm not touching that thing. All right, Zoom Z is gone. C black. Nothing there. Docu. Nothing there. 5. Yeah, that's a beast. Look at it. You know, I said 30-minute low would have been ideal. It's a beast. Yeah, I don't know what their new, well, it was earnings, but all right, let me look at some opens. Zebra, we're still in half. That's holding fine. S-Fix, nothing there. Grub is green, IWM green. Oh, our H pulling in a bit. Oh, that's, yeah, that's coming in a little harder. So good thing we have the covered call. Apple is still a drag.
Hey, Dan?
Yep.
Bring those cues up one more time. I'm not sure that you've had a fat finger. Oh, okay, they look right now. Something not right on my platform anyway. So instead of, I don't know, it won't allow me to short cues, or it's not coming up in my what's connected to the execution. So I'm looking at, I'm going to buy QID. The trade.
Oh, that's funny. That's the way around it. Yeah, look at semis are weak today. Our CSX, so I said 30-minute high, we'll roll a short call. Roku is fine. Zen, Grub, RTN, Dropbox, RCL, cracking a little bit. All right, our open positions are fine. Well, we still haven't decided what to do with Google. Take the stop, do nothing, and roll into the close. Let me see what the premiums are for next week to see, you know, what we could get. If I were to close it right now, the midpoint's 90. So we're only down 32 cents. Let me see what we can get paid for next week. We could go to, we could do the, well, but that's naked, never mind. 180. The 1100s. If we sold, here, we're just having a discussion here. If we just sold the 1100s, 1090 on Google, that's $1.25. So if we have to pay 90 cents to close our other one and roll this, then we're still getting an additional 35-cent credit, but it's not free money. We have a new position on. So the 1100 strike is now here. So let's open that up for discussion. If it takes out today's low, are we willing to roll it to a new put spread way down here? But then, you know, so our maximum gain if this new one expires worthless, is still the 125 a share, but we have a $10 wide spread on our hands, and we've got to manage that like a brand new open trade. What do you all think? I'm just watching it. I'm doing nothing here. I'm just talking what's in my head, and there's no perfect answer. That's why there's judgment involved.
If you switch that to the lower put spread, what are you going to lose now?
Say again?
If you switch that to the lower put spread, what is the effect on your P&L?
Well, that's what I was saying. We would lose $30 by just closing it out right now. Well, now it's $1.05, but we could roll it. So we aren't incurring any loss by rolling. We're rolling it. We're pushing it down the downstream, but we're opening up a new position, the 1100 1090s.
Okay, so this is kind of foreign to me. If you just close the position now,
then you're going to book a 40-cent loss.
And if you roll it, that loss is what? Like mirage?
Well, yes, that's what I'm saying. It's a mirage because our subsequent gain or loss is now merged into this new put spread of next Friday, 1100 1090. Absolutely right.
Okay, so what if you didn't have this position on right now and you just opened up that lower put spread?
Then you get $1.25.
So in other words, the thinking is opening up this new one, instead of making the $1.25, you're only going to make 80 something cents, 90 something cents, because you do have that loss, correct?
No. So let's go through the math. So, well, yeah, the loss would be postponed into this 1.25. So we sold it at, let's just say 60 cents. So I don't have to say 58 cents. We sold it at 60. We could close it for $1. That's 40-cent loss. But if we roll it, then we're buying to close at $1. We're reopening this one at $1.25. So we're still getting a 25-cent credit. And so now my total, my maximum gain now on both these transactions is the $1.25. Well, it's the 60 cents we received plus this extra credit we're receiving of $0.25. So the answer is 85 cents a share.
Instead of the full 125.
Correct. So in that sense, no, the losses didn't disappear. It's just merged into the new trade.
That's the point, right?
Yeah, so in that sense,
and if the new trade doesn't work, you still got the old loss plus the new loss.
Exactly correct.
Wow, it took to get to that point.
Exactly correct, and that's right.
Okay, I just want everybody to know what they're dealing with, because this rolling thing doesn't just make losses go away. And maybe everybody understands that's in the room, but I mean, this rolling thing is kind of, like I said, a mirage of, this loss is gone. It could be, if you're profitable on the other trade, you just made less, than you would have if you didn't have the first one on.
That's exactly correct.
So that's a big plus, but you better be right, because otherwise you've gotten stabbed in the eye twice.
And that is the problem on rolling in hope mode. Correct.
Okay.
You keep taking in little pennies, but as the stock goes against you for so long, you're reaching your maximum loss. And then when you try to roll something that's $20 in the money, you ain't getting a credit anymore. There's nothing left of time premium.
Okay. Everybody got that?
No, that's an excellent discussion.
So markets are actually showing some strength here. The Qs are. The spiders still look like they're going to drop. Personally, and this is my personal take, it doesn't mean it right. I don't like what Dan calls a problem child. They're dealing with in this rolling whole concept. If that loss on the Qs narrows less, you cut it in half.
Wait, Q's or Google?
I'm saying the Qs are going up. I'm not watching Google, but if Google goes up because of the Qs and you can pair that loss, I would do it personally. But I don't like dealing with complicated, and that's complicated to me. Different rolling, and then what happens if it works. I mean, if it doesn't work, if it works, it's fantastic.
Okay, but let me just interrupt you there. We are, the premise was we are only doing this if the underlying is still bullish. If the underlying looks lower, then it's a no-brainer. We're just going to take our loss and wait for a new setup.
Okay, so, but Google could go down another 10 or 15 points and it's still bullish.
So that answered it. And that's why I was purposely having this discussion. And then, you know, I'm still watching it here and haven't made a decision, but Spider's new low, IWM giving it up. We can get out right now, our Google, for a 12-cent loss.
Immediately. If I had the trade on, I'd be taking that 12-cent hit.
And now it's 65 cents, so it's less than that. All right, I'm watching it like I'm not going to give it much room at all. I have it loaded up to close it.
I look at the market right now as it's still bullish. It's correcting a bit, but
actually, you know what? I just bailed break even. I put it in to see if I'd get filled. I just bailed break even, I guess, because of this pop right here.
Yeah. Why deal with it?
Well, and I did that because of the spiders making a new low and an IWM having an engulfing bar.
Right. And now it's flipping around, and I want to just people to understand that are new to this that nobody likes taking losses, and you can get out of something with a minute, like a pinch, at a certain time, even though there's the possibility it could turn into money. Sometimes that just as an active trader and investor, that thing flipping around just drags your attention over there, and you're just focused
absolutely
on other things that you could be making money on versus it's a commission, it's a little nothing. Be done with it. You could always come back to it. It's a new trade.
All right, so that's what I'm going to tell them to do. We're just going to close it, break even.
That OLED, Sanjay, looks like it'll go lower. It's kind of stabilized here with the market, but definitely rolling over. Nice sell setup on Sienna. Now, just to point out, John, it did retrace all of a bearish wide range bar, but that could have just been because of the bullish market. So my only reservation is, will it take out the low? But it's definitely a sell today.
Now Google's profitable if you're holding it. But no, that was a very good discussion we had there.
So Google's profitable. So here's how I, besides Google, we look at the market, and the Qs are coming up into a gap fill. Let's just say 10 o'clock, 10:30 reversal period. This thing rolls over and heads down with a vengeance, short term. And now you're down $1.50. Your brain is going to be so twisted.
But I wouldn't let it go down to $1.50 loss myself.
Sometimes things move fast, but you know what I'm saying.
Right. No, and Greg, in a future show, I think we need to dedicate it solely to market psychology, risk management.
Well, psychology is totally, well, not totally, but a huge part of it is money management and risk management. Anybody that wants to prove that to themselves, just take any stock and quadruple your normal position and watch what happens to your thinking.
That's funny. And let's see what Dow stocks are doing today. AXP, Apple's the biggest drag today. Apple and Boeing. Oh, Boeing, shoot. Look at that. Boeing gave up that strength. I mean, that's why Boeing has big, premiums all the time. He's a whippy animal. So those are the three biggest losers right there. Now I'm looking at the green ones for relative strength. Look at that Home Depot. J&J yesterday was green too. That's perking some more. Travelers. Hey, Travelers put spread maybe. You're popping there on the.
That's surprising because XLF is weak.
Yeah, but I know.
I like it. Showing relative strength to the market and XLF.
There's a lot of juice in the 125s for July. So that's telling me it has earnings. So let me look.
July 19th.
Yep, the day before earnings. Unless this could be a candidate that we just, swing trade. Let me see what its volatility is. It's 70% implied volatility rank. So, playing with those earnings ones, and that would actually be a good study. And I'll bet individual stocks have their own personalities of when does volatility into earnings start rising? Is it 10 days before, 20, 5? Because then, since we're short puts, that means we're short volatility. And then if volatility starts to rise into earnings, then that's a headwind for us. Our RCL is doing better. Oh, our ZS is doing better too, negating its small little gap down this morning. Let me take a quick look at these gapping stocks. Our gold, nothing. New, nothing. These are just those. Avgo, wow. Oh, that's Zoom Z, sorry. Avgo, gap down, but no trade. Docu, no trade, 5. We talked about. Look at that. That thing looks higher right now. Man. So do not short that. You know, it's a very shallow retracement from this big gap up. I'm watching it on the other screen though. Remember this one? We said maybe a put spread. S fix. What would we do? Like the 1950s would be ideal. There are no 1950s, but the 19s for next week. Not enough juice there. And they don't have weeklies. But if we went up, wow, I mean, they're spready, but check this out. We could do the 18s. 18.13 is 45 cents. And 18 is way the heck down here. And that's for July. I don't even know. Nah, I'm going to pass. You know, it's just 50% rally into resistance here. But what the heck is an S fix? I'm going to look him up real quick. Consumer cyclical specialty retail. They sell shoes and some jewelry and handbags. All right, specialty retail out of San Francisco. Workday would be a 1, 2, 3 short for Friday. It closes here. Facebook turned green.